It's Erich Reimer. I'm here today to talk about the recent coronavirus events that have been disrupting the financial markets as well as the general global economy. I think that every day we're seeing the Dow go up 1,000 points, go down 1,000 points, back and forth with an overall downward trend. I think that this shakeup has been long coming. I think throughout January, late December, February, the markets have been far too complacent. They have been richly valued, continuing to go up without any seeming awareness of the potential disruptive effects of coronavirus on supply chains, on consumers, on the general world economy, not just in China, but everywhere. I think that now the correction we're seeing is slightly overhyped, over far too much. I think that a lot of it is fear selling. I think that once some time passes, once we see more concrete data about where things with coronavirus are going to go, how things are going to be quarantined, managed, handled, adapted to, not only in terms of public health, but in terms of how businesses are going to rework their systems and demonstrate how they can continue to post results, profits, basically run their business with adapting to the effects of coronavirus. We see many companies nowadays encouraging work from home, canceling conferences, and I think this is part of an adaptation process to the risks that coronavirus poses. I think that for probably the next month or two, we're going to probably continue to see disruptive effects on the markets from coronavirus. I think, however, by the summer or so, then I think things will have leveled out a little bit. I think by then markets will go back to looking at the fundamentals. They'll go back to seeing uh, where the numbers are from businesses, from economies, from countries, and it could still be bad. Coronavirus could be all over the place and disrupting supply chains, and people are unable to adapt. And I think it's also very possible that things could be quite good, that things could be managed, could be controlled, and things return to some semblance of what they were before. I mean, we saw for a while how the trade war really disrupted markets in a similar way. People thought it'd be a fundamental change to a lot of things. However, eventually, even that was adapted to and resolved. I think with coronavirus, it's still very unclear which way it's going to go, but I think it's very possible as well that by the summer, by the fall, we'll be looking back at it as a very momentary trend that certainly had a big impact on the markets right now. However, in the long run, may not be so disruptive after all. And I think in the end, what matters are the numbers, what businesses post, profits, earnings, GDP numbers, etc. And I think by the summer, we'll probably begin seeing a return to that once the uncertainty dies down for coronavirus. In the meantime, it's certainly an exciting ride in the markets, and I wish you all happy trading out there.